There are 23 of us on this committee. Almost everyone will be here today. I ask each of us to stay as close to the 5-minute mark as we can because we have votes at 11:30. So thank you all for your cooperation. Chair Powell, thank you. Job growth is strong as unemployment remains historically low. You might not know that from the opening statements. Many drivers of inflation, corporate greed, rising inequality, supply chain disruptions, Russia's bestiality, if you will, in Ukraine, won't get better because of interest rate increases. Every indication is that this post-pandemic economy is different. Should we be worried, Mr. Chair, that the Fed is treating this economic period as it has in the past instead of reacting differently?
Thank you, Mr. Chairman. So we've been aware since the very beginning and have discussed this publicly on many occasions that there are some differences this time. We, in particular, have not seen the kind of supply-side collapse that we saw at the very beginning of the inflation outbreak. Also, the outbreak of a war which had significant effects on commodity prices a year ago. So all that is different. There are also, though, some similarities. There is a mismatch between supply and demand. You can see that in the goods sector still. You saw it in housing prices going up over 40% since before the pandemic, and you see it in the labor market where we have 1.9 job openings for every opening, for every unemployed person. So we're well aware that this particular situation involves a mix of cycles of forces, not all of which our tools can affect. But there is a job here for us to do in better aligning demand with supply.
Okay, understanding you have limited tools to address inflation, in our conversations in the past show my concern about continued rate increases that may not actually address the root cause of inflation. They hurt workers, and many of us contend we can't follow the same old playbook. Next question. Last year, 3 banking regulators issued proposed updates on the Community Reinvestment Act to account for changes in our banking system. My question is, does the Fed remain committed to work with FDIC and OCC to finalize a CRA rule, and when will that rule likely be finalized?
Yes, we do remain committed, and I believe we are in broad agreement with the other 2 agencies on the revisions to the rule. So now we're in the process of writing all that down, and that'll take some time. And then after that, of course, it will come to the Board of Governors for a vote, and that'll involve briefings and discussions. And I can't give you an exact date, but
as quickly as possible.
Yes, but it will be some months.
Okay, thank you. Banks weathered the shock of the COVID-19 shutdowns mostly because of the fiscal response provided by Congress. We now see a spike in loan delinquencies, an increase in overall risk. Banks are again plowing billions, as many other corporate leaders, always defended by people on that side of the aisle, into stock buybacks, which makes me concerned that if there's a downturn in the economy, banks could end up with too little capital. That's why I'm worried about any potential rollbacks of safeguards or regulations. Can you assure me that the Fed will keep capital requirements strong and exercise more long-term forward thinking than corporate CEOs that seem to be focused on the short term?
I can assure you as to the first part that we'll keep capital requirements strong.
I didn't expect you to comment on give me an opinion about you're looking more forward than companies that look at the short-term benefits of stock buybacks. Mr. Chair, when you last testified, I asked you about the risk posed by crypto assets, stablecoin, the Fed, and other regulated possibilities. How's the Fed evaluating the risks of crypto-related activities by your supervised institutions?
So this is something we've been quite active in this area, and I'll say that we believe that innovation is very important over time to the economy. We don't want to stifle innovation. We don't want regulation to stifle innovation in a way that just favors incumbents and that kind of thing. But like everyone else, we're watching what's been happening in the crypto space, and what we see is quite a lot of turmoil. We see fraud. We see a lack of transparency. We see run risk. Lots and lots of things like that. And so what we've been doing is making sure that the regulated financial institutions that we supervise and regulate are careful, are taking great care in the ways that they engage with the whole crypto space, and that they give us prior notice. And we've issued, along with the FDIC and the OCC, a number of issuances of notices to that effect.
Thank you, and I will close with this. I've long pushed for the Fed to prioritize workers and for the leaders of the Fed to reflect the diversity of our country. We've made progress, but our work is not done. We have a new opening. Understand, it's not your job to appoint the new Fed member. We have a number of upcoming vacancies at the reserve banks. I support Senator Reid from Rhode Island, Senator Menendez from New Jersey, and other colleagues who are pushing for more diverse voices at the Fed. Senator Scott.
Thank you,